Thanks, Tanika. All right, welcome back, everyone. We'll now move on to item 8.1 in the report. We've got Ian here at the table who's going to walk through the key highlights of the finance report, and then we'll open it up for questions. So over to you, Ian.
Thank you, Mr. Chair. Morning, everybody. This is the first quarter report, obviously, so pretty early in the financial year, and to be honest, there are not a lot of variations in there that I think need to be noted to you. Particularly, the one area I think that will be of interest, or I'd suggest is worth noting, is around CapEx. So, page or paragraph 35 sets out a table there which summarises where things are at. So, in summary, we've got a $73 million budget for the year. Our year-to-date spend for the first 3 months was $7.6 million. And we're forecasting at the moment, as shown in the table, 69 million. There are a number of specific variations that are noted in the commentary below the table. So, in particular, we know we're going to have variations around the Transport Hub, Blue Bluff Road, State Highway Revocation, the Link Road, and the Waikanai Water Treatment Plant. And those variations have been reflected in that $69 million figure that you see in the table. But at the same time, we are also going through a process at the moment to review more broadly, I guess, where we think the overall CapEx plan will land for the year, and that's obviously so we can get the most accurate forecast for this year, but also to feed into the annual plan process, which we're looking to come to you shortly to start that discussion. So that process of the broader review is still in progress, but it does, we think, realistically, $50 to $55 million is probably more likely to be where the CapEx will land for the year. And at that point, I was just going to ask Sean to maybe add a little comment to that.
Yeah, thank you, Ian. So through you, Mr. Chair, so that was the end of September. So we have moved on a bit since then, and you'll see there's a number of contracts in the paper actually that have been awarded. We've also progressing with a number of other areas of work, but as Ian's mentioned, I don't believe we'll hit the 69 million that was forecasted as part of this work. And some of the reasons for that, the Link Road issues there in terms of timing around NZTA confirming subsidy has pushed that back in terms of that. That was a large area of expenditure that was proposed for this financial year. That, to some extent, is being helped by the fact that we're also now looking at bringing forward the Blue Bluff works to open that, and we're hoping that prior to Christmas we can try and open a pedestrian access through there. But the bigger, I guess the longer term solution there is in the order of a couple of $1 million to actually push the road further inland, and so we'll be doing some work on that this year. Revocation, there's issues both in the negative but a positive, I guess, in terms of inflated extra costs associated with, as Ian's mentioned, the Transport Hub, the revocation. Some of the elements of that have gone up in price. The shared path in Waikanai is part of that 1.3 million. It's not the total cost increase there. And so some things are going over. We've got some extra work in there, but in general, we're still going to be under that budget. And COVID's obviously had an impact there as well in terms of timing, and resourcing and sourcing materials as well has been another issue that's affected the capital program delivery this year.
Thank you. Anything further you want to?
So the results of that review will feed into the December update. But as I say, we'll also come to the table through the annual plan discussions.
Excellent. All right. So we'll open it up for questions there from elected members. Councillor Elliott, and we'll also come to those on Zoom as well.
Thanks. I just wanted to know a question for Sean. Sean, do we know if the fire last night at the house on the Link Road designated site was a planned burn or is it an accident? Do we know?
I'm not too sure how that's relating to the paper, and whether Sean knows the answer. It's a finance report, not a. But Looking at Sean, he's shaking his head. He doesn't know.
I don't know what the cause of that fire was. No. No.
Yeah.
Yeah, it's not.
Thanks,
Well, it's certainly
Jackie.
not part of the project.
Okay, so it doesn't sound like it was. Thanks, Councillor Elliott. Councillor Holbrook.
Yeah, thanks for that. And thanks for that update about the capital expenditure too. That's not unexpected, I don't think, in this environment. I just wanted to, just curiosity really, what accounts for the variation in the table at paragraph 20 in property, plant and equipment?
Yeah, so we haven't prepared a forecast balance sheet at this point. So all you've got here is the September actual, and it's compared against, well, in the case of the variation, which I think is what you're talking about in the right-hand column, it's comparing the September actual against June 22 budget. So in some ways, it's actually an apple and an orange a little bit. The main reason for that difference, the budget assumed the full spend of 73 million we've just been talking about, plus vested assets, etc. So all the activity that was planned to occur in this year is included in that budget, and of course we're comparing only a September position. So for December we will definitely prepare a full forecast picture, but the reality is that I can tell you the majority of that difference, if it's the 84 million you're talking about, is because we have not spent anywhere near 73 million, and we have not had 35 million of vested assets come in, which are also in the plan.
Okay, thanks for that. I have a second question, if I may, Mr. Chair. So paragraph 31, the forecast full year rates position is 188. I'm assuming it's 188,000, unfavourable to budget. What accounts for that?
That really is just the sum of the minor forecast variations. So, to be honest, I can't tell you exactly what's in there, and I would suggest overall it's basically on budget. 188. I mean, we're expecting at this point of the year nothing in there that should concern you at this point.
Great, thank you.
Councillor Halliday.
Through you, Mr. Chair, just a few questions, but nothing startling. But look, number 9 on page 8, it sort of ties into number 16 on page 9, it's just around development and financial contributions. Mr. Maxwell's noted to us that we've got a large increase in consents coming through at the moment. I notice we're sort of unfavourable to budget there, but is that likely to have an impact on the development and financial contributions against ongoing budget, them sort of going up as such? I'm just curious if that would be the case.
I think the key thing to note here too is the paper actually said it's just due to timing differences.
No, it's not. I have no problems with the unfavourable aspect of thing. I'm just curious with the amount of consents we've got coming through, what we budgeted for the year. Have we allowed for that sort of growth in the contributions, or is that going to sort of come in potentially on top?
It's very conservative. Mr. Georges and I have regular conversations about what we think growth will look like, and the sorts of numbers I've talked to you about are what we know is in the pipeline, but they haven't hit.
Right.
And the real question mark is, are they going to hit in the next few months or few years even? Yeah. Because we can't control that timing. But fundamentally, at the moment, with the direction of travel we've been seeing, the budgets are still what I would call reasonably conservative. So I'm hoping we'll actually do a bit better than that come year end. Did you want to add anything in?
No.
Cool.
This is a general question, sorry. It's not a case of that, but when COVID arrives, what impacts are likely to happen on budget, or are you going to see happen on budget, or is this just going to be very subjective as to we're just going to have to wait and see how things progress as such?
I'm not sure if the finance team's done any work on it to date, but I guess what we learned from the very first lockdown was for Kapiti, the impacts weren't too noticeable. The sorts of help that we were offering wasn't financially material to us. We were worried that it would be a lot larger, if you remember, in terms of people's ability to pay their rates and things like that. So broadly, as we're still trying to evaluate what traffic lights are going to mean and COVID in the community, the concerns that I have aren't so much directly financial, but we will flag increasingly clearly to you that they will impact on our ability to deliver our work program, will impact on people's well-being, and there's a lot of unknowns about how much of your workforce is going to have to go home and isolate and things like that. So Sean might want to add something by the looks.
I hope you've got Sean leading the team interrogating the traffic light system proposed.
Just to add so contractually now with all of our civil and capital works programs, contractors are now requiring or including elements of risk associated with COVID impacts. So there will also be potentially a financial implication there in terms of the delivery of those projects. If that clause is then activated, you can expect that we'll then start to have to incur potentially some further costs around day rates and slowing work down that are now all being factored into those contracts in advance.
Through you, Mr. Chair. Number 17, page 10. I just wanted to touch on the local government petrol tax. Sort of includes assets vested to council, local government petrol tax. Do I assume that the contribution that we're talking about is the roading contribution that comes in from the NZTA, or do we have other income streams from that petrol tax collected by government as such?
This is, Council, this is one of the incredibly generous funding tools that the government gave us back in the 70s and hasn't changed since then. All councils get a share of fuel excise duty that is collected centrally. And from memory, we get 0.67 cents per litre. You figure that out against the current price of fuel. Yeah, and that's a 1970s price. And the Shand review suggested that that the inflation adjustments should have got it up to probably what should be now over 10 cents per litre for us. And we're getting 0.67 cents. So I think it's about $1 million a year we get in fuel income or less. And diving, of course, once everyone transfers away from internal combustion.
Sean's shaking his head and going down. So
It's not a material contribution to what we do. It isn't the NZTA subsidies for roading work. That's a separate line. There's two grants lines for that.
And I guess that actually completely led on to that. I will just throw in three waters with regards to the funding approach. But the introduction of EVs as such, have we seen any impact on that revenue in relation to that, or do you know if there's anything the government's looking at doing with regards to how EVs are going to be charging or getting charged for this sort of thing?
I'm going to have a crack at this first, and I'm going to come to you partly because I raised this at the Horowhenua one. I think the answer is going to be it's probably too insignificant at the moment.
Yep.
But if you look at the Treasury's forecast for Waka Kotahi, it's an 8% deficit or impact on the operational budget through the impact from EVs and the government's policy around that stuff. So, but Wayne?
You'd be more up to date than me on the actual percentage impacts on their funding, but my response remains the same at the highest level, is that Ministry of Transport had been asked over a year ago, in fact it was the previous government, asked them to start a review of the policy for funding of transport work, because the current hypothecated fund from mostly fuel excise duties is not going to be fit for the future. So the big picture is they very confidently have told the local government that they've got until the next RLTPs, in other words about 3 years more, to worry about that, and they're quite happy that we'll all bumble along with insufficient funding in the meantime. We don't think that's particularly acceptable because there isn't enough money now. The government's already topping things up through things like NZ Up and other sort of random outputs. So we are beholden to them. What I think you're going to find is a complete shift in terms of the way Waka Kotahi is funded once this lands, and it'll be around some pretty some significant changes, kind of like pay as you go,
Yeah.
regardless of your fuel would be my perspective.
Like
So
the diesel one.
the weight of your vehicle and the amount of miles you do, kilometres, are gonna be the influences on it. What would concern me is whether they even think local government should get any of that at the end of it all. It would be another little funding tool that they'll probably take away from us, the whole 0.67 cents.
Okay. I noticed on page 15, number 35, of the table we're just talking to, actually, the capital expenditure program. Obviously, we're spending quite a lot in our three waters. Is that prudent? I know it's a part of the long-term plan, but it's just everything that's going on at the moment, or is that part of business as usual aspect the government wants us to tick along with? And are we likely to see some funding come back in relation to that?
Look, fundamentally, and it really goes to the heart of our whole point, is we're trying to do the right thing by our community, and never mind the politics of it, and never mind the implications of it financially. So we have set a whole long-term plan on the basis that this is what our community needs going forward, and I think we're proud of where we've got to. And so the starting point, I think, is we still continue to do the right thing. There'll probably be a couple of interesting conversations we'll have with you as we set the annual plan about whether we might revisit a couple of our policy positions, but that's not about the work that we do, it's about the funding that we've got. So unless Sean wants to add anything, yes, we've got a pretty significant work program in the three waters space really now, and that's the right stuff to be doing.
Fair enough.
Noting that some of that stuff was locked in, and contracted over a couple of years. So I'm just seeing some of the Autaki stuff that's been done at the moment as well, and it's partway through that project. Just checking, Sean, you wanting to add anything?
Really? No, I was just going to. We're already committed to some of that contractually, the Waikanae, and from a consenting point of view, there are implications from the wastewater side of the activity that we need to progress with, but certainly the next 3 to 4 years outwards is, again, there is more work sitting out there as well that be part of that conversation about the government's plans.
I'd probably just add, our working assumption is that any debt we incur over this interim 3 years will be added to the reimbursement, if you like. So we'd like to think we won't be out of pocket for any water-related work.
You could.
Thank you.
I would
Sean?
just add, and on the basis of what Ian was just talking about there, certainly in the stormwater area is an area where we've got a surplus of design work that we could move forward at a greater rate of pace if there was a desire to do more of that work. But that's part of that annual plan conversation that we're going to have before Christmas.
Thank you. Martin, you still going?
Yep. Not too much more, sorry. Page 12, I think it was. Number 25. Cash was applied to. It's got payments to employees and suppliers. These are bunched together. I was wondering if there's any chance in future reporting that can be split, employees separate from suppliers, that may or may not be able to be easily done. I don't know, but I'll just make an inquiry.
Certainly look at that.
Wouldn't be me without a little touch on derivatives. Page 11, number 20. Where are we? Page 11, number 20. Statement of financial position. There was actually an increase in derivative financial instruments. I was just up from an actual of 890, we're at 1962. I was wondering if that could be explained as such.
The main. So I got to be perfectly honest. I'm not. That's the asset side of the equation. I'm not quite sure what's behind that. The main swap book is sitting within the liabilities, which is the next block down.
Yep.
And so that you'll see has gone has reduced from a 14 million liability at June to 10 million now.
Yeah.
And so what that certainly is the swap book, and what that's reflecting is that we're in an environment now, market environment, where interest rates are increasing, and so we're required to revalue our swap book each month, and it basically means that the cost of our swap book is looking increasingly attractive relative to a market that's rising. So certainly the environment's changed, in the last 3 to 6 months.
Sure, and I guess the
I haven't yet, Councillor, heard the howls of outrage at the fact that our swaps are getting better. We hear them when it goes the other way, and the same thing applies. We don't realise them. We don't cash them up. It's just a paper entry to say that's what it's worth on the market. Were you to transact?
And interestingly, I had that highlighted on my one, so page 8, number 11, in terms of the gains, unrealised gains. But as the Chief Executive has said, and Ian will say, it's on paper.
Yeah.
So they go up and down.
That. But I guess it does lead to another question. With the interest rates starting to move and with such a big CapEx program, should we, what's the story about locking in longer term debt at the current price in relation to addressing that CapEx as such? So,
I mean, that's something we will be monitoring and are monitoring pretty closely, right? And it ties back to what level of CapEx we'll actually deliver and whether we, how soon we will need to actually increase our debt book. I think probably over the course of this year, given where we think the CapEx will land, we probably won't have to increase our net debt a great deal. So it's kind of wait and see, and we currently are highly, we've got a reasonably high level of fixed instruments in place, so we're 90%-ish covered at the moment. So we're in a good position, but we will just look to maintain that, I guess, going forward.
Yeah, the only thing I'll add is we did look ahead and pre-fund some of the current work program on the basis that we saw rates going up and wanted to lock in some fairly, the better rates that we could. So we don't normally do that. We pre-fund our maturities, but this year we've additionally pre-funded some of our existing planned work program. The fact is that we may not need any of that, but that means we've locked in some good prices for when we do draw on it and spend it.
It's a good question, Martin. I guess the key thing from my perspective, and other councillors have been around for a while, will attest to this, and I think even our auditors from memory have made comments, and whether it's Standard & Poor's as well, is that the track record of the team around the derivatives and the pre-funding and so forth has demonstrated that they do look forward, and that overall that they perform well. And so, I mean, I certainly don't know all of the ins and outs of it. I understand it, but what I do know is that I trust that the team are doing what Wayne has just said in terms of looking forward and doing what's necessary, because their track record is showing that they've performed well in that area.
I appreciated the answers. No, it's fantastic. Thank you very much.
Cool. Is that all?
Yep.
Yeah, excellent. Councillor Elliott.
Thanks. Just referring to paragraph 34 on page 14, given what you've just said in your answer to Councillor Halliday, that the $30 million budgeted borrowings for stormwater CapEx upgrades is quite advantageous for us at this point in time, then I'm assuming that the $1 million surplus position there that's possibly going to be for the next few years, and it's 3 years earlier than originally expected, could give us some leeway to start talking in the next annual plan maybe for some household cost relief by way of volumetric charge decreases.
Yeah, so that is something, the surplus that's sitting there is something that we have talked about in our initial annual plan discussion, so I think that'll be part of the mix.
Well, I think it'll be twofold. So, an interesting point to raise, because the other side of the coin of that one, and whether Sean does or doesn't want to say anything, that closed account is for that activity. So, equally they could be looking at investments in that area around that activity as well. So,
yeah, it'd be interesting to know maybe in the future report whether or not that is allocated, has been allocated, or whether or not it's just sitting there. But yeah, thank you.
Yep.
Right. I don't see any further names up on the screen. I just want to check via Zoom. No hands up. Excellent. So we have got the recommendations found on page 25, recommendations 79 and 80, moved by Councillor Holbrook, seconded by Councillor Halliday. Right of introduction, Janet? That's waived. Open it up for debate. Don't see any. All those in favour say aye. Aye. Against. Carried. Don't let that there was no debate be a bad sign. It's a good sign.
Thank you.
Oh, thank you. Councillor Randall's voted as well. Look, good work, Ian, to you and the team, and appreciate you walking us through that report. So now we are looking at item number 8.2, contracts under delegated authority, found on page 26. Oh, excellent, Ian. Yep.
We'll get through these hopefully pretty quick. Sean might
And who's going to walk us through? And
Just if we could take the
reporters read. Thank you.
Mr. Chair, I don't have anything further to add than what's in the paper.
All right, team. So contracts under delegated authority. We're taking the report as read. Is there any questions for staff? Otherwise, I'll look for someone to move the recommendations. Okay, I'll just got Councillor that's said it's happy to move. There's no questions. We've got someone that's happy to second. Moved by Councillor Elliott, seconded by Councillor Henford. I don't see any lights up for debate. So I'm going to put that to the vote. All those in favour say aye. Aye, against, and that one is carried as well. And from there. And so the next one is confirmation of minutes found on page 45. Anything raised in the minutes? And Tanika, if you just let me know if Councillor Randall or McCann raises anything. Otherwise, I'll look for someone to move the minutes. Can't see any lights. All right, does someone want to move the minutes then? True and accurate record. Councillor Holborough. And Councillor Buswell. I take it there's no grand speech you want to make for a right of introduction, so I'm going to put that to the vote. All those in favour say aye. Aye. Against, and that's carried. Thank you, Councillor Randall. Nice to hear from you.
You're welcome, Mr. Chair.
Thanks, Bernie. And so now there's no public speaking time, and so I think we now move into publicly excluded session. No community board members in the room, and so Mr. Burns, we're just going to move into public exclusion. So if Tanika, if you can just let
okay then.
Know.
Goodbye.
Thank you. See you later. Thanks for joining us.
Yeah.
Just before Councillor Randall goes, just keeping to our normal process around not doing PE via Zoom, Councillor Randall did raise why we would have such a minor matter and publicly excluded. And so I just thought it would be helpful just to clarify it. So his point was that it was quite an insignificant amount, but
I think the answer to that is that it names the vendor.
And that's what I thought it was in terms of the the privacy aspect of it. So hopefully that answers that question for you, Councillor Randall. So thanks for joining us today. We're going to leave you to it as we move into public excluded. So enjoy the rest of your day. Hopefully they were there. Talking to myself. So can we have someone that moves us into public exclusion? Oh, Councillor Buswell, and hi Natasha, made it up. You weren't here earlier. And seconded by Councillor Elliott. All those in favour say aye. Aye, against, carried. And over to you, Ian. Live stream.